The NASDAQ posting its worst day since October of 2022. That wasn't that long ago, and it was a terrible period. Remember, back then we hit some lows. Led largely by underwhelming reports from Alphabet and Tesla. Joining us now, Brent Thill. It's very easy to say Brent Thrill would be very close. Does that ever happen to anyone, Brent? You're an analyst at Jefferies. I mean, I have a little...
I've been called worse.
Either one word. We got a few of these big names to go. Is it going to be, is it going to rhyme? Might not repeat itself, but do you think it's going to rhyme with big tech? Will it be disappointing, or have we had the shakeout already just from those two reports?
Yeah, good morning. We think we've had a lot of the shake. Look at even last night, ServiceNow, IBM, good software numbers. So I think we're seeing a rotation inside of tech. We've seen a huge outperformance of semis and the internet. You've seen underperformance of software. And so our belief is software in the back half of the year will start to begin its move back up based on the underperformance and pretty good results. So if you look at last night, again, two bellwethers in software, good numbers, no signs of massive demand cracks. I think we have an overbought situation in a lot of the semi names. You've seen such a massive run. Many of those names are up between 40 and 100%. Internet was up about 10, software up about 2. So again, I think you're seeing a little bit of everyone out of the pool yesterday, timeout, reassessing where they want to go after their swim time. And we believe, again, there's going to be a mini rotation. Nothing to take away from semis, and we think the fundamentals are alive there. But right now, I think ultimately we've seen money come out across the group, and a lot of that money actually went into financials, industrials, other subsectors beyond tech. So that's what we saw yesterday. Again, a couple of good reports last night. So our belief is a lot of the clearing event has been put in. And there may be a little more to go in terms of the rotation. But again, we think there's some attractive subsectors now, like software.
Is there something you can point to definitively for what makes the Russell 2000 suddenly more attractive to people? Is it an interest rate cut? Is it the notion that maybe the AI craze has gotten, at least for the main players, has gotten a little bit ahead of itself, and you're looking for maybe beneficiaries that are further down the chain? I mean, what do you attribute it to, and how far will it go?
Well, just as I see it inside tech, and that's my seat, I think you've seen just an overcrowding in a handful of names: Amazon, Google, Microsoft, right? And so there's a broadening event that's going to happen. That's number one. Number two is what you said on the rate cut. That should effectively help. 3 is the increase in M&A. So we're seeing a material pickup in software M&A. You've seen a number of transactions from strategics and privates. Obviously, a lot of the smaller mid-cap names downstream, they're not buying the large ones because we can't get those through the regulators. So we think there's a number of factors in helping that out at this point.
It's pretty interesting. Do you, in your view, think we've overspent on AI, underspent on AI, or just the right amount? And how far down the road do you have to look before you see the payoff, do you think?
Yeah, the payoff is still years away. So if you think about all the software companies this year, Joe, are saying no revenue in AI in 24. So the ramp really begins in 25, 26. Microsoft is leading that pack. We think they're in a phenomenal position. It could be a low single-digit % of their total revenue stream this year and grows going forward. So it's still a ways out. We are definitely at the beginning of the curve. We have to spend. As Microsoft has said to our investors when they've asked how much you're going to spend, do you want us to get 6% market share in AI or 60? And so we're at the beginning of this curve, and I think many have the analogy of this was the internet beginning in the 90s. This is the move to cloud, the move to SaaS. Would you want to spend more money in the front of the curve or the back of the curve? And everyone says the front. The question is the payoff going to be there? All the semi names are reaping the reward today because they're getting all the capital from all the software and internet companies. We won't see the real return and the real ROI on these products, again, for probably several years. So we're continuing to see CapEx go higher. Google went higher by $1 billion on our forecast. You're continuing to see 30, 40, 50%, some cases doubling of CapEx in many of the software names. So we're really, really early. And again, there are going to be a bunch of companies that don't make it. There are going to be a bunch of stories that make it. I think we can see the companies that can really make it. And enterprise AI, it's going to be Amazon and Microsoft is the easiest bet. And there's going to be a lot of vendors that don't hit. Again, it's harder to see right now because we don't have the data points, but we have clear data points. Microsoft and Amazon are going to win.